Welcome back. Ada Konobi, a senior investment officer with financial derivatives company, joins me now as we continue our focus on commodities. Good morning to you, Ada.
Good morning.
So listening to conversations there with Dolapo, let's take it off on the last part of it. Oil prices at $50 per barrel, and he used an Africa, analogy. The head with the brick coconut, no be him, the enjoy and pass. We have to say it in the local parlance. It's not a very good time for us right now. But you see, at some point, everybody seems, to feel that with oil prices beginning to look a little better, we should be excited.
Yes, well, that's the sad news about it. Oil prices are gaining in the international market. However, our production is
yes,
still,
like you said, 1.4.
At 1.4, and there are threats it could even go lower with the continuous attacks on our major pipelines. Like he rightfully said, there are other reasons as to why prices are above $50 per barrel now. We have the U.S. inventory data declined by about 4.3 million barrels per day, and even cushion in Oklahoma, their WTI as well has declined. I think this is the first time this has declined. I mean, from me tracking the movements in oil storage in that region, and U.S. production has actually reached a 2-year low to about 8.7 million barrels per day. So this is good news somewhat in the global market, but then it's not really good news for us because we are supposed to benefit from high prices. Looking forward, we have the OPEC meeting coming up, so it's next week. But I don't expect any policy changes in the next OPEC meeting coming up. There's the U.S. Fed meeting as well, so the decision from the U.S. Fed meeting will have an impact on the demand for oil. So if interest rates are increased, it could dampen demand because it makes the dollar a bit stronger. But then it also means that the U.S. economy is growing, which signals higher demand for oil. So oil prices are expected to remain volatile, but it will still trade above $50 per barrel in the medium short term.
So let's come back home. Let's talk about domestic commodity prices. We still notice that the spike continues in spite of, with the way things are right now. One would expect that it will continue.
The spike continues in all food items. Tomato is a major concern for almost everyone in Nigeria. Now, the prices are continuing to triple. We know that the reason for this is the pest attack in major growing areas in the country. Kaduna has declared a state of emergency, and 5 other states have been affected with this disease. We don't know how this is going to go along, because it is a deadly pest that has a ability to double in its mutation capacity, and it has the ability to resist pesticides. So this could go on for a while, but then investors we could go into other forms of farming, just like the greenhouse farming. So what happens is it kind of controls the temperature and environment and kind of limits the risk at which most perishable food items are prone to danger. And there are other factors as well that are leading to a high cost of prices. We have the droughts and the Boko Haram attacks in the north, which has literally slashed planting activities in that region by 70%. We have the Fulani headsmen still attacking some areas in the east and the north central part of Nigeria. And diesel prices are actually high as we speak. It spiked about 13%. This is not surprising, seeing that these diesel importers still import petrol. So with the switch in price of petrol now, it seems they are moving to products which they feel they will have more margin. So it seems that they're importing more of the petroleum as opposed to diesel. So we'll expect to see the hike in diesel price carry on, but in the short term, but it would literally come back down again.
Okay, so with the gloomy picture that we have right now, let's have it a little bit clearer. How much has been lost in terms of naira and kobo?
So, but in the tomato market, we've lost about $1 billion within the last 1 month. So farmers are complaining, and this as well is affecting future harvests. So harvest for the coming harvest is expected to drop by about 50%. And we actually produce 1.8 million metric tons of tomato, and we've lost about 720 tons already. And in Africa, we are the second largest producer of tomato after Egypt, and in the world we're like the 13th largest producer of tomato. So but what we have here now is that consumers are switching to other products, just like the tomato paste. So Chinese manufacturers already have slashed their products by 50% to try and attract Nigerian buyers to import more of this tomato paste to the country. But then if you realize in the 41 items banned, where tomato paste is included in the 41 items ban. So it is something that it is quite alarming, and there are threats that there might be continuous food scarcity if this carries on and if no measures are taken. As
food scarcity or generally or just for tomatoes?
General food scarcity, because like I said, some major planting areas in Nigeria are already affected. Like I said, in the east and north central, Boko Haram are still capturing states in the north, and those two regions are the major food basket of the country. So it is something that is quite alarming. The government actually needs to take further steps now to kind of long-term solutions to what is happening now. We don't have to wait till it gets bad. We're about 170 million people. We have 170 million mouths to feed. So there are threats of food scarcity as it is right now.
Adakunobi, thank you so much for coming on the program.
Thanks for having me.
Sharing those insights with us from you folks at FDC.
Thank you.
Business Morning continues in just a moment. We'll be right back.